Hey there, fellow investors. Ever dreamed of traveling the world, but your wallet seems to disagree? What if I told you that investing globally could bring the world right into your portfolio and potentially grow your wealth while you're at it? In today's video, we'll uncover the opportunities beyond your home country, and I promise it's worth watching until the end. But before we dive in, do me a favor and like, share, subscribe, and hit the notification bell to stay updated on the latest investment tips. Let's jump right in. Picture this. You're standing at the edge of a vast ocean of investment opportunities. You can choose to stay on your familiar shores or dive into the deep and explore the untapped potential of global markets. Are you ready to take the plunge? Stick around, and we'll reveal the top benefits and strategies of investing in global markets. So, why should you consider investing beyond your home country? There are several reasons. First, diversification. You probably heard the old saying, don't put all your eggs in one basket. By spreading your investments across different countries, you're reducing the risk of your entire portfolio being affected by a single economic event. It's like having a safety net for your wealth. Second, you'll have access to faster-growing economies. Some countries, especially emerging markets, are experiencing rapid growth. Investing in these markets can give you a slice of that growth pie, potentially leading to higher returns. Third, currency appreciation. As you invest globally, you're exposed to various currencies. If your home currency weakens, your foreign investments may appreciate in value, acting as a buffer against currency fluctuations. Lastly, global investing means more investment choices. The world is a smorgasbord of investment options. By going global, you're not limiting yourself to the companies listed on your home country's stock exchange. Instead, you're opening up a world of possibilities, literally. Now that you know the benefits, let's talk strategy. To invest in global markets, you need to do your homework. Just like a tourist exploring a new country, study the political climate, economic stability, and growth prospects of the countries you're interested in. If you're into global investing, it's a good idea to start with developed markets like the US, Europe, and Japan. These markets tend to have more stable economies and better regulated financial systems. Don't just focus on one country or region. Spread your investments across different continents to reduce risk and capitalize on opportunities worldwide. One of the easiest ways to dive into global investing is through exchange-traded funds, ETFs, and mutual funds. These investment vehicles provide instant diversification and professional management, making it easier for you to dip your toes into the international investment waters. Before you pack your bags and hop on the global investment train, it's essential to be aware of the risks and considerations. Investing in a foreign country exposes you to its political and economic landscape, so be mindful of these factors and how they could impact your investments. While currency appreciation can work in your favor, fluctuations can also negatively affect your returns. Some markets may have lower trading volumes, which could make it harder to buy or sell investments quickly. Keep this in mind when choosing your global investments. Now that we've covered the basics, let's explore some exciting global investment opportunities. Emerging markets like China, India, Brazil, and Russia have rapidly growing economies and a wealth of untapped potential. Investing in these markets could lead to higher returns, but keep in mind the increased risks. The world is becoming more interconnected, and many innovative companies are making waves beyond their home countries. Keep an eye on global tech giants and startups that are reshaping industries. Climate change and sustainability are pressing global concerns. Investing in companies that focus on clean energy, resource efficiency, and sustainable practices can be both financially rewarding and socially responsible. And don't forget about global real estate. Diversify your investments by adding international real estate to your portfolio. From rental properties to real estate investment trusts, there are numerous ways to invest in property markets worldwide. Hey, while we're on this global journey, don't forget to check out the description box below for valuable resources. Trust me, you won't want to miss these gems. As you venture into global investing, some sectors offer unique opportunities that can add value to your portfolio. Let's take a closer look at a few of them. E-commerce. With the rapid growth of the internet and smartphones, e-commerce is booming worldwide. Companies like Amazon, Alibaba, and Mercado Libre are dominating the online retail space in their respective regions, presenting attractive investment options. Financial technology, or fintech, is transforming the banking and finance industry across the globe. Companies like PayPal, Square, and Adyen are revolutionizing how people make transactions, while others like Financial and Nubank are breaking barriers in emerging markets. The global healthcare sector is seeing significant advancements in areas such as biotechnology, pharmaceuticals, and medical devices. Keep an eye on companies like Novartis, AstraZeneca, and Takeda, as well as innovative startups that are pushing the boundaries of modern medicine. As the world shifts toward clean energy, renewable energy companies are gaining traction. Companies like Vestas, First Solar, and Jinko Solar are leading the way in wind and solar power, offering promising investment opportunities for the future. Since currency fluctuations can have a considerable impact on your global investments, it's essential to understand how to navigate these risks. Use currency hedging strategies, such as futures, options, or forward contracts, to offset potential currency losses. Many ETFs and mutual funds also offer hedged versions to minimize currency risks. Just as you diversify your investments across countries and sectors, aim to diversify your currency exposure. By spreading your investments across different currencies, you can reduce the impact of fluctuations in any single currency. Stay informed about exchange rate movements and how they may affect your international investments. Understanding the factors that drive currency values can help you make better investment decisions. Another way to diversify your global investments is by adding international bonds to your portfolio. These can provide a steady stream of income and help balance the risks associated with equities. Look for bonds from stable economies with solid credit ratings to minimize default risk. International corporations also issue bonds, which can offer higher yields compared to government bonds. Keep in mind that these may come with higher risks, depending on the issuer's creditworthiness. If you're unsure about picking individual bonds, consider investing in international bond funds or ETFs. These provide instant diversification and professional management, making it easier to invest in global fixed income markets. Finally, staying informed and adapting your strategy is crucial when investing in global markets. Stay updated on global economic trends, news, and market developments. Continuously educate yourself on international investing to make better decisions. Regularly review your global investments to ensure they align with your financial goals and risk tolerance. Make adjustments as needed to maintain a well-balanced and diversified portfolio. If you're unsure about your global investment strategy, consider consulting a financial advisor or professional with expertise in international investing. They can help guide you through the complexities of global markets and ensure your strategy aligns with your financial objectives. So, are you ready to embark on a thrilling adventure and expand your investment horizon beyond your home country? With the right strategies and a keen eye for opportunities, global investing can unlock a treasure trove of potential returns, diversification, and wealth-building prospects. But remember, patience is key. Global investments may take time to yield results, so treat investing as a marathon, not a sprint. Focus on fundamentals and make your investment decisions based on strong financial performance and growth prospects. Avoid getting swayed by short-term market fluctuations or news-driven events. Periodically review and rebalance your portfolio to ensure it remains aligned with your investment goals and risk tolerance. This can help you stay on track and adapt to changes in global market conditions. Embrace volatility as an opportunity to learn and grow as an investor, rather than being deterred by it. The world is becoming more interconnected, and navigating the global investment landscape can be both challenging and rewarding. Stay curious, stay informed, and remember, the world is your investment playground. So we've explored a wide range of topics related to global investing, from sector opportunities and strategies to risk management and long-term mindset. Now, I want to leave you with a question. If you could invest in any country, which one would you choose and why? Share your thoughts in the comments below. We're excited to hear what you think. And with that, we've reached the end of our global investment journey. Thanks for joining me, and I'll see you in the next video.